The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. We're going to start the show with looking at the Dow Jones. We had that Mercury retrograde back on the 18th of May with the new moon. Now we got a full moon due tomorrow. And we are also coming in right at the 786 retracement, right on the money. We hit Friday right on the lows. So right now we're bouncing a little bit. Looks like we're going to start the market a little higher today. How much higher we'll get, I don't know. The first chart that I posted into the Tiger TV was the chart for the advanced decline line, and as you can see, that line it looks it's very suspect. I mean, there's more selling going on than buying. John Logan covered that in the first hour. This basically, the line shows pretty much the same thing. It's rolling over from basically the NASDAQ has not given up anything at all, folks. I mean, it's pretty hard to be bearish the NASDAQ. We're right near the highs again. Potential of a double top, but again, it's pretty much just potential at this point, but it's just very strong in the NASDAQ. In 2000, if you'll recall, we topped in January in the Dow Jones and already had started down, but it wasn't until March 24th, 3 months later, that the NASDAQ finally topped out. And when it did, it gave back 85% of everything that it had made from 1995, but that's neither here nor there. Of course, now we've gone back and matched those old highs again. So the old theory of just stay in the market forever looks like the right one at these times in the old timetable, but that's usually not the case. There is massive distribution looking at this on this advanced decline line. I mean, something's wrong here because it really is a really amazing thing to keep an eye on. We're having a lot of movement in currencies, as we always do. We had a beautiful 61% retracement this morning in the euro. Stopped absolutely spot on right where it was supposed to, down at the 108.92 level. And it's had a nice 70 pip rally, which is equivalent to about $800 in the euro. They move around quite a bit. We've had big movements in the NASDAQ. The NASDAQ was up, went 30 higher, 30 lower, and we're back up to where we were. So we've had basically a 90-point swing pretty much in the NASDAQ since early morning hours of around 2 a.m. New York time when London opens. So these markets are jumping around quite a bit, which you like to see that. Good for patterns. And so we're having pretty good volatility. The thing that some of these things, I'm going to post the NASDAQ in here and show you because there's a potential for a double top in here. But again, it's a potential, and we could easily make a new high. We haven't even taken out the 61% retracement of the low we made late last week, which is really hard to fathom considering how much the selling we did on the one day in the Dow Jones when the Dow was down 240 points. The NASDAQ was down just marginally, I think around 40 points, and it turned around and rallied very strongly from there. Also, if we look at the Russell small cap, here's another one that looks, there's nothing really bearish about this. I mean, there's a, chance it could roll over from this level, but that's neither here nor there. Now, the Dow Jones does look like it is rolling over, as does the S&P 500. But again, it doesn't take much from these markets to just turn around and just go screaming to the upside. We could make one more or two or three more new highs, and we've got this new moon, the full moon coming in tomorrow. With the orb starts today, it goes all the way out to Wednesday. So between now and Wednesday, we've got some really key things to look at, and we have some really strong astro dates coming in here on the 2nd and 3rd. We're going to have Norm Winsky on June 10th. He's going to come on and give us a little ideas of where he thinks the market's going using his planetary things from his astro trend. And then we're going to have Ed Carlson on later this week. He's with the Seattle Market Technicians Association. He's the gentleman who wrote the book about Three Peaks in a Domed House, which is, you know, really a tremendous book by George Lindsay. And he's going to be our guest on a little bit later. And we'll have Rich Anderson also on later this week. Since I'm going to be doing 5 days a week here, I'll try to get more guests in, you know, to give us some more information on other perspectives, because I know you get tired of hearing me all the time, you know, preaching the same thing over and over again. Now, the Chinese market has had some really wild swings, and it's doing it again today. It's up about 4%. On the 29th of October, so let's try November. On the 29th of November, oh my God, Larry, let's slow it down a little bit. On the 29th of May, the market was down 6%, and then today the market was up 4%. So we're having real volatile swings, and that's ideal for pattern recognition. So we want to keep an eye on this this market very, very closely. In fact, keep an eye on all of them, because we live in interesting times, as the old Chinese curse says. But that one looks pretty interesting on the Chinese market. But another one that looks really, really, really bad from a technical standpoint is the emerging markets. Folks, take a look at this emerging market ETF, the EEM. We have a perfect symmetrical head and shoulders pattern that formed last week. It's just as perfect as can be. The right shoulder was exactly 786, a perfect price to what the right shoulder was. The head came in right near the 786 of the whole move from 2011. And not only that, but we've sold off dramatically here in this market, more than 10% in just a matter of about 8% in a matter of just a few days. So this is telling us that this head and shoulders pattern is flat on working, and we've got to be able to watch to see that if it gets above this high, this right shoulder, then this would certainly be wrong. But right now, this market looks like it certainly wants to go lower. That you have a butterfly, you have a Gartly formation right at the right shoulder. It's just got a really beautiful pattern to it, and you know, whether it's going to continue or not, we'll have to be able to wait and see if that's going to be the case. I've had a question about the soybeans. I listened to John Logan, you know, talk about the beans, and you know, they've broken below the level that I wanted to be a buyer. That was in 903. The market rallied up to around 911. At that point, I sent out a special letter saying, email saying, look, put your stop at break even on these, because it's either going to work right away or it's not. And the reason why I did that was because the pattern was so absolutely perfect that it either had to work right away or it just was not right, and it wasn't right. And so we just want to wait a few days. Now, we've got the lunar things coming in here with the with beans and also wheat and corn, especially wheat. Wheat goes off lunar cycles better than anything we have. In fact, that work goes all the way back to the Babylonians and Sumerians, where they would talk about Mercury and the full moons and new moons with wheat harvesting and the growing of wheat. So those are things that I think we got to watch tomorrow with the wheat market. Wheat's been down around the 470 level. We're trading around 476 right now, but it should have some pretty strong support in that 470 level. That's near the old bottoms that we made quite a while ago. Now, corn just keeps going lower. And beans have broken down below the 786 retracement, but more importantly, they broke the time frame. I mean, it should have taken off on the 26th of May. That was last Tuesday, and it didn't do that. That tells us that the suspect of the pattern that we were looking at was certainly there, and that's why we preferred to raise our stops so that we didn't have to risk very much at all. That's the main thing that we're trying to keep an eye on with these things, is to protect ourselves, you know, for you know, something down the road. There's a really interesting chart that I wanted to show you folks. This is from our good friend Andy Fink in Berlin. He's a young man who does an incredible job with his charts and also with his trading. I chat with Andy every day, and we share ideas. But this is the long-term chart of the euro going back all the way to 2000. And as you can see, that it gives a price objective at around 99, and that should be coming in towards the end, the later part of the year. We're having a nice little bounce here in the euro, like we've talked about before. But anytime we get below that 105 level, again, we're heading down to the 98 level. This has been a really nice 3-week rally that we've had, and whether it continues on, we'll have to wait and see. Today's low was just spot on, 61% retracement of the low we made on Friday. It was just as perfect. We had a beautiful ABCD there. It was just very nice. I posted that into Tiger TV so you guys can take a look at it. But the high came in at 110, perfect ABCD. 61% retracement came in at 108.96, right on the money. The low was 108.94, and market has rallied 70 pips since that spot. So it's actually doing pretty well. We're probably going to have a pretty active, well, that's not saying very much, Larry. We're probably going to have a pretty active week this week because of the fact that we have so much going on from an astro point with the full moon. Let's try it again with the full moon coming in here tomorrow, and then on the third, we also have some other lunar things, plus some other planetary cycles that are all coming in together. I don't think we have as many as reports as we did last week, but I think we have maybe we might have non-farm payrolls on Friday. I'm not sure. No, we had that last week, so we probably have personal income or smaller reports. So we'll have to wait and see, what really happens. I would not be surprised if we made another new high, folks. This market has just come back too strong. The New York Stock Exchange Index, even though it's been weaker, stopped right at the 786 retracement on Friday, and is held up, relatively well. It made lower lows, and it's a jobs report on Friday. Thank you very much. And so we have much weaker in the New York Stock Exchange Index than we are in the NASDAQ and the S&P. And that's that whole thing of the rollover that's going on. We have a lot of stocks that are rolling over. We have more declining stocks than advancing stocks, and that that could change. Maybe things could turn. That's the key thing. The other thing that makes us think that we could have bottomed here on Friday for a little bit was the transportations. If we look at the transportation index, it stopped spot on 61% retracement, and that's been the weak sister of the whole thing. So we want to watch that closely, because we could easily, have bottomed here, and we could get a 3 to 5 day rally to take us to new high grounds without any trouble at all. Whether we'll continue on with a great deal of thrust or not, I don't really know, but no one else does either. That's the beautiful part of it. That's the one thing that pattern recognition will do, is at least it'll tell you to stay on the right side of the market. We're going to have to take a break here pretty soon, but we want to come back. I want to talk a little bit about the crude oil market when we come back, because we hit a 61% retracement in crude on Friday with that big 4% up move, and it's going to be interesting here, because if we get below 59, we got a chance to make 54 in crude.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, and I posted a chart in of the crude oil market. You can see we rallied up to the 62 level on Friday. We sold off about $3, not about $2.50. Well, we did sell off $3. No, we didn't. We sold off $1.50 per barrel. We're about almost unchanged right now, so it's an interesting. We did have a 4% move in oil, in one day, which was quite a bit, and we should have some resistance up here at this 60 area as a really strong resistance, and it could go all the way up to 62. But we've had a 37% rally off the bottom, so that should hold it. But who knows? This oil was at 116 once before, and 140 before that, so it could go anywhere it wants to. But right now it's up against a little bit resistance. Now I wanted to spend just a second here before we get to the next break on the to take a look here at the I just saw that gold was flying. Boy, that's good to hear. I was afraid that darn thing was not going to hold that 1285 level, but I'm glad that it did. Now, we've taking a look here now at the DAX index, which is the German equivalent of the S&P. Today's low was just about exactly spot on to the 786 retracement. The low today came in at 11,341. It's supposed to come in 11,378. We're trading about 60 points higher than that right now. So this could be an important bottom here in the DAX. And if you'll notice how much weaker the DAX is as opposed to the S&P 500, where the S&P 500 was only making a 78% pullback, we were making, and that was on a shorter time frame, we were making a 78% pullback from way back in May. On the DAX. So the DAX has been much weaker. It has hit some really major things today, and we'll have to see if that's going to be the case for the rest of the day, rest of the week, if it holds these levels. Anytime we get below those levels, I would think we're going to be looking at something, to go a great deal lower, and that would make a huge ABCD, taking it down into the area of 10,000. Speaking of gold here, we've been looking at this really strong support that we had down here at the 1180 level. We hit that, and now we're now trading above $1,200 an ounce, which is what we really wanted to see. It's starting to get some momentum here. We could easily get up to 1216 either today or tomorrow. That's just a 61% retracement of that move, and that would tell us that we're probably on our way. This has got 3 higher bottoms, folks, going all the way back into the April 16th level. That's a really positive thing. Both of the sell-offs were nearly exactly equal, of about $60 per ounce. Silver is acting even more bullish because it could not back off to the 640 level that we were hoping that it would get to. It only got down to about the 655 level and has had a tremendous move to the upside. And that's going to see that, it's acting pretty nicely also. We did take out the April highs in both silver and gold, and that tells us that we could take out the May highs without too much trouble. All we need is a little bit of acceleration, and we could easily do that without any trouble at all from that standpoint. We've had a question about Tesla. I'll get that chart here for us in just a minute. Tesla had some interesting patterns up here. Give me 1 second here to get Tesla up, and we'll take a look at it. And here we go. Don't want to look at a 5-minute. In fact, it's still up at this 250 area that it's been at several times. And I think that we can't get much above where it is right now because it could easily, accelerate. We've got a very narrow ranges here for a stock that's trading at 250. This is another sign that there's a lot of interest in the NASDAQ stocks because they just keep ratcheting higher, and that's usually a bullish phenomenon. Even though we have the advanced decline line that looks absolutely horrible. So that's what we see in Tesla. It's had a heck of a move after we made the butterfly pattern down there at the 183 level, but we are up against some pretty significant resistance up here in this area of 248 to 250, and we're trading at 250.80 right now. Or at least we will be this morning, with stocks getting ready to open here pretty soon. The bell will go off, and we'll see how much they're going to rally, which they usually do right after the open, and we'll take a look at that. And when we get back after the break, we'll talk about the bond market a little bit. We had a lot of activity in bonds come in on Friday. We hit that exact Gartly pattern. The market broke and then rallied back a point, so it's still down quite a bit. We'll be right back after these words.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I'm going to put the chart of the bonds up that we were talking about last week. It was really strange because I knew we were switching over from June to September, and so I posted my charts for this week about 10 minutes before the market was supposed to close on Friday. Just June bonds were trading at 157.03. 2 minutes before the close, the market broke a full point. It went all the way down to 56 and change. It went a little bit lower than that. In fact, it went another full point lower than that. And then today we rallied back a full point off the bottom, almost at a 50% retracement. So this is a major Gartly that is fulfilled in the bonds as near as I can tell, because when it breaks 2 points like that in bonds, which is quite a bit, that validates that 157.0506 level. And now we've rolled over to the September, and it's really hard for most folks because of the continuation problems. You just have to, look at each contract separately. But this market, to me, looks like it's made a pretty significant top. And the last time we had a Gartly like this form, which was way back in May 17th, the market broke, 5 points. Well, we broke 2 the first day, so 5 points is not a big deal. So this is going to be real interesting. The same thing with the Treasury notes, only Treasury notes couldn't make the 61% retracement. They only made the 50% retracement with the notes. So the notes were just a tad weaker. But remember, the notes are the big market. That's the one that is far, far bigger than the bonds. The notes are the big one, then the bonds, and then we have the energy complex, the crude oil, gasoline, and crude oil and gasoline mainly, and a little bit heating oil. But those are the main ones. But if we take a look here at the notes, you'll notice the notes only made a 50% retracement from that level going back in April. It's been a downtrend. We have higher interest rates on the way. The Fed hasn't told us this yet, so we'll have to wait and see if this is going to be the case. We will watch and see what's going on with the market. Say nothing really exciting is happening with the stock market so far today. We've had just a little bit of movement, not very much at all. The market opened a little bit higher. NASDAQ is still higher on the day, even though it sold off a bit. S&P is still up a bit. So it's not really anything really exciting yet, but we'll have to wait and see. I do want to mention one other thing, and that is we did have an all-time record broken on Friday, and that is that we had margin debt reach the highest level that it had ever been. Now, listen, I'm going to say this very, very slowly because when I read it, I couldn't believe it. The margin debt now has reached an all-time high, and it is 50% higher than it was in October of 2007. I will say that again. The margin debt now is 50% higher than it was in October in 2007. Yes, I know it's different this time, and yes, it is going to be different this time because it's going to be a lot worse. I don't know when the fat lady's going to get into that orchestra and start to sing, but she's going to fall into the orchestra and knock out a couple of tubas and baritones and what else, because this is a really negative chart, folks. If you follow technical analysis at all, when you look at that advanced decline line, it's just really amazing that people are not absolutely afraid of this. But why be afraid when things go up forever, I guess. So we'll have to let the history tell us what's going on with that. We have a lot of things moving in currencies, which we always talk about. There's a really interesting currency trade for today. In fact, it's already completed. And it is, just give me a second here and I'll put it up. This is with the British pound. We had 5 ratios come together back on the 18th when we had the Mercury retrograde new moon, and all those ratios came in at 158. We came down today. We hit 151.99, which was a little below the 786 by a few pips of where it was. It's rallied quite a bit since that point. So we're in a zone here where we should have a pretty good rally here in the British pound. We've been down 8 days, so that itself would tell us that we'd have a little bit of a bounce even if we're in a bear market. I spent a lot of time with currencies, so I'd like to, share you some of the ideas that I see in currency because they're a wonderful thing to trade. And, they have great volatility, just about everything you could possibly ask for. But if we take a look here at one of the third largest cross rate, the euro is first, and then the pound, and then the yen. And the yen, you can see here on the long-term dailies here, we have this shooting star candle that happened back on Thursday. And the market went up and hit the exact, this was within 2 pips, folks, of the exact 1.618 expansion up there. It was right on the money. Then we sold off, and right now the market is sold off even more. We're approaching the lows that we made on the day of that shooting star. That would confirm this pattern that the yen has made some type of a pretty significant top here versus the U.S. dollar. And the last time we had one of those, which was back in March, the market dropped, 4 full, 400 pips, which is equivalent to $4,000. So that can be a considerable amount and still be bullish. That's just going to be a big correction in this overall, bull market that we're looking at here. But at this level, we hit that spot on, and that would tell us that we're really near where we have a pretty good correction, and we've already started. We're already down 100 pips from the high, so that confirms that that high is pretty much in, and so we want to be watching it very closely. I've had a question come in about the VIX index, and I wanted to come in. Boy, they really hammered this NASDAQ. Boy, oh boy, that's a hard thing to believe, isn't it? Okay, now let's take a look here with the VIX index. Here again, I don't understand how people can be bullish, but you know, what do I know? I'm just an old cowboy from Terre Haute, Indiana, just trying to. We had a big gap here in this VIX index. We haven't filled it yet. We might. We've been in the same area now all week, last week, and then again today. So nothing really dramatic is happening. I'm anxious to hear what Basil talks about the VIX, because Basil Chapman on his show certainly does the best job of analyzing the VIX of anything that I've seen. But we have had very little volatility with the index itself, and we are going to start seeing days at least 300 points in the Dow up and down. There'll be up and down days during that time, and the biggest move will be 700 points in the Dow. And since fear is a greater emotion than greed, my assumption is it's going to be to the downside. But the reason why you figure that out is we've had the biggest move in the Dow in the past year has been 400 points, from one day to 250, down 150 one day, another 250 the next day. So that 400-point swing will be multiplied times 1.618. That'll take us out to about 700 points in the Dow. Now, if you go back and look historically, those ratios hold up really well, with the exception of times when you have an outlier event like we had in October of 1987. All bets were off there, because that was a second time in a generation that we had a crash. And frankly, it wasn't a crash. It was the greatest buying opportunity in the history of the world. That low that we made on October 19th that day, the next day, the 20th, the Dow made a slightly lower low by a few points with virtually no liquidity in the market. And it was exactly at the 61% retracement of the August 9th, 1982 low. I mean, right spot on. And from there, we went from, what was, I think the Dow at that time was around 1666, I believe is what, right around that level, 1666. We increased by all the way up to 18,322. So it was one heck of a buying opportunity. Boy, folks, if you were there, let me tell you, it didn't look like a buying opportunity when it was happening, because it was very, very scary to see that days that was so scary that day. Then the day after and a few days after too, the Monday and Tuesday, the spreads, there was no liquidity, that no one would make a market in the S&P pit. The few traders that were there that weren't bankrupt, they were putting a 10-point handle. That would be equivalent to a 100-point handle on the E-minis now. That's just the difference that was going on there. There was just no liquidity in the market. $1,000 in between trades now. If this were the same thing, it was $5,000 back in, because it was 10 times greater. But it's crazy stuff. It was very scary. It was something I don't want to go through again, that's for sure. Okay, now we've had a question about one other stock, and that was Boeing Airlines, and I posted that stock into the Tiger TV when we first started here. If you'll give me a second, I'll post it in again. It's in an area where it's at major support, and if it doesn't hold this, then this market is going to take it down another 8 points, down to the 61% retracement. That will take it down to the 132 level. We're trading at 140 and change right now, and it certainly looks like the target level is down into that level without too much trouble at all. The bond and note markets have told us that we're getting ready to see higher interest rates. It's really going to be quite interesting here, because the Fed's going to have to do something eventually one of these days, and it's going to shake up the market. I don't think that's going to be anything that'll be surprise to anybody, but history says that even after the Fed starts to raise rates, sometimes the market takes as long as 24 to 48 months to make a top. I don't know if it's going to be that way this time or not, but that could happen. This is an experiment. that they've been doing, this quantitative easing. I don't think there's any question about that. No one really knows what's going to happen when they try to, take it off. I don't know. But remember, that June is the second worst month for being in the market, behind, I believe, October. In the last 10 years, the Dow has been down in June 8 out of 10 years, and that's including the 6 years that we went up straight. So you can imagine, how negative June is for the Dow. The S&Ps also the NASDAQ have a high preponderance of being down during the month of June. Supposedly that's the end of the old adage, sell in May and go away, but sell in May and go away didn't do anything this year, because if you sold at the beginning of May, you were at the same place you were at the end of May. It didn't make any difference. And so whether June's going to have any effect on it or not, I don't know. What I think will be the effect is that advanced decline line. That's where I think the effect will rise. But that, again, has to be proven by, history telling us, what we're looking at. I wanted to mention just a little bit about, we talked a little bit about soybeans, and we're going to have Rich on later this week. But I've been following. Someone asked me to take a look at the DBA, which is the ETF for the agricultural complex. And as you can see, we're forming a ABCD pattern here down in this 21 level. It's taken 3 months to complete, so we could be looking at a pretty good bottom here in wheat and corn and beans. Now, we're coming into this new moon. Let's try it again. Coming into the full moon tomorrow. And so we want to be watching wheat specifically, because wheat really reacts nicely to the full moon. So on tomorrow's show, we'll try to pick out some spots here in wheat where we might take a look at it to be a buyer. In fact, we might do that right now, because the price levels as we get closer to them will be very, very close to seeing where they are. Give me 1 second here, and we will be going down here 1 second here to wheat. And this is a bear market, but we should still have a pretty good place to buy it. We're going to look at it right here. Oh, we're getting down very, very close. Give me a second here, and we will be okay. Wow, we hit the number right on the money. We hit that exact 786. Boy, this is one where you got to ask the question: do I take it here, or do I wait to see if it's an extra day or not? We made a slightly lower low than Friday. Right at the 786. That came in at 474. We've only rallied 4 or 5 cents since that time, but it looks like it could have a good spot here where we would be looking at it for a place to go long wheat somewhere in this ballpark. This is nothing to do with the fundamentals, boys and girls. This has to do what's really happening with the overall technical picture and the lunar cycle that we have with the wheat. And that lunar cycle in wheat goes, like I mentioned before, back to the Babylonians and the Sumerians. If you want some interesting information on that, read Dr. Andrew Lowe's book on the evolution of technical analysis. Dr. Lowe's from MIT, and he certainly understands a lot of these things. And he discusses the original technicians were astrologers. So we'll watch this, quite closely to see if this is going to be a turn here in the wheat, which I think it will be. In fact, since we've been talking, it's rallied 5 cents. I mean, I don't believe this, but should have been buying it, I guess, but I got to do things first. We've rallied just in the last 5 minutes here. We've rallied about 5 cents, which is $250, and we're still rallying as we go. So maybe the low in wheat came in today. We'll have to give it some time. Haven't checked in with the soybeans or anything yet, but that's pretty much what we're watching here. We got the stock selling off quite a bit now. This is quite a bit. We've had a big drop here in the NASDAQ of about 40 points. This is quite substantial from a technical point. Let's take a look at this, and we'll be right back after these few words from our sponsor.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Okay, we're back, folks, and we've had a situation where the NASDAQ has taken out Friday's lows by about a penny, which 1 point or so, which is really nothing. Probably major support. We'll have to wait and see. We are watching crude oil quite a bit because we're back up to the 61% retracement here at this 60.40 per barrel level. And if this is correct, we shouldn't get much higher than where we are presently in crude oil. That's my assumption, folks. That's not a prediction. So we'll have to let us see what's going to happen, down the road. with that. Now I'm going to be ahead of Steve Rhodes, which will be interesting because a lot of times when I listen to the shows, I get a lot of my ideas from both Steve and Basil to cover the hour that we're looking at. But frankly, what I try to do is to cover the things that I'm watching, the most. And of course, the main thing that I'm watching is the fact that we have this crude oil number up here at this 60 level, but there's a potential problem with that, folks, and let me show you what that problem is, and that is in the gasoline market. The gasoline is much stronger. We're making new highs in gasoline futures. We're only making 61% retracements in the crude oil. Now, crude oil is where all this stuff comes from. It's the big daddy rabbit, so to speak. But the other markets, heating oil is behind the gasoline by quite a bit. But this oil market is moving because of what's happening to the gasoline futures. Evidently, everyone's gone out and bought a new Mustang or a new Dodge Charger so that they're using high-tech gas. And that's why we're going to be seeing higher prices in gasoline over the summer months. We'll have to wait and see if that's going to be the case or not. We have we got time for one other thing, and that is the someone asked a question about it. Oh shucks. Oh, they asked a question about the S&P cash. I just wanted to bring this up and show you the difference between the S&P cash and the New York Stock Exchange. Okay, we're coming to the break already. This is the end of the show. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and